we've seen inflation coming down. Partly that's because demand is moderating, but a lot of that improvement in inflation also can be attributed to what's happened on the supply side of the economy. So, last year and the year before, we saw some progress on, getting rid of some of those impediments on the supply side in terms of supply chains, bottlenecks, those have been normalizing. We're not back to where it was pre-pandemic, but those have been getting into better balance. And then we've also seen people re-enter the labor force. So the supply of labor has gone up, again, a normalization, if you will, given how many people left the labor force during the pandemic. And we've also seen recently revised data that shows that immigration was also higher than we thought. So there's been in sort of normalization in the labor market as supply and demand have gotten to better balance. We've also seen on the product side, improvement on the supply side and better balance there. And that have contributed to this improvement in the inflation front. So we're not there yet. We're not back to 2% inflation, which, as you know, is our goal. But we are making good progress on that. I do expect that progress to continue over time and getting back to 2%. I don't think the pace of disinflation this year will match what we saw last year, which was a very strong pace, partly because I think, we're going to have to rely more on the demand side for the rebalancing than on the supply side, given that we've normalized some of the labor market supply and also the product market supply. But I have that kind of good outlook that things are going to continue along the path that we're on now, and that we will be in a position later in the year as we gain more confidence that inflation is coming down and will be on that sustainable 2% path to begin easing off of the restrictive policy that we have. And I do anticipate if the economy evolves as expected, we'll be in a position to actually begin lowering the Fed funds rate.